welcome you all watching Business Plus here on News 9 Live. I'm Krishna Kumar. First up, a quick check of all the headlines that we're tracking this morning on Business Plus. Some relief for beleaguered edtech major BYJU'S as billionaire Ranjan Pai comes to the rescue and takes over 1,400 crore rupees worth of debt. Air India is all set to receive one aircraft every 6 days from now on for the next 18 months as Air India prepares for its 2.0 brand new foray with the Tatas. And Bangladesh's garment industry is in a big fix. 150 factories have been shut after huge protests by workers. There's a good chance that all those favorite clothing apparel of yours made in Bangladesh, their prices could spike up. And those were the headlines this morning on Business Plus. We begin with the biggest of them all, and that has got to do with the beleaguered edtech major BYJU'S. Finally, some good news. Bear in mind, BYJU'S has a debt pile of over $1 billion, $1.2 billion. And now the latest we understand is that Ranjan Pai, the billionaire, has offered to take over 1,400 crore rupees in NCDs or non-convertible debentures, as in BYJU'S debt worth 1,400 crore rupees. And in exchange for that, Ranjan Pai will get one board seat himself and will be able to nominate two more. So that means Ranjan Pai gets 3 board seats in return for 1,400 crore rupees, isn't it, Karthik?
Absolutely, Krishna. But I think, the $1.2 billion of outstanding loan that BYJU'S still has on its books is a slightly different story.
Yeah.
That loan was taken in the year 2021 when BYJU'S was on this major acquisition drive and used that money to buy as many as 9 companies. Those 9 companies also included Epic and Great Learning, both of which are on sale right now to repay that loan that it had taken up. So no real development ever since last week on that front, except that perhaps the Epic platform may get sold for a little, not a little, in fact about $100 million lower than what it was bought for. But that's for another day. I think what we are focusing on today
is about, put that into perspective, Karthik is absolutely right, that $1.2 billion loan is what BYJU'S, and it's selling its own units that it bought. But this entire takeover of 1,400 crore rupees worth of debt by Ranjan Pai has got to do with its test prep platform called Akash, isn't it, Karthik?
Absolutely. So here comes in Davidson Kempner Capital. Right. This US, New York-based investment firm had actually vowed to lend 2,000 crore rupees or $250 million to BYJU'S to go ahead and acquire that stake in Akash.
Right.
Now, that transaction was to happen in the month of May this year. Now, what really happened was May is the time when this negative news inflow for BYJU'S started coming. So, out of that 2,000 crores that was to be pledged, to be paid to BYJU'S, lent to BYJU'S, only 800 crore rupees was actually given by Davidson Kempner to BYJU'S. Now, the balance 1,200 crore rupees never made it to BYJU'S. But what has Ranjan Pai really bought that 800 crore rupees of loan worth for? 1,400 crore rupees. Now, 800 crore rupees is the loan amount. The balance 600 crore rupees is actually the interest which has been paid to Davidson Kempner.
Right.
So, 1,400 crore rupees divided 800 crore rupees as loan which has been bought, and 600 crore rupees of interest on that loan which has already been paid. Now, this, of course, for Ranjan Pai, I think a little expensive valuation, because when this loan was taken, I think the loan was still taken at a flat valuation of about $22 billion. Today, BYJU'S valuation is much lower, as we know. Now, what does this get Ranjan Pai in return? Of course, it gets Ranjan Pai a good 15 to 20% stake in Akash, and that Akash holding, in addition to other investments made by Manipal, could eventually take it up to maybe in excess of about 25 to 30% or so if Ranjan Pai and Manipal Group decides to invest more in BYJU'S. Right now, the Chaudhary family owns about 30% in BYJU'S. The balance 70% is held by Baiju Ravindran and his family alone.
Right.
Now, Akash is, of course, this great tuition institute which was acquired by BYJU'S and has been slated as the upcoming IPO from the stable of Baiju Ravindran. And that IPO is likely to be worth 8,000 crore rupees or so. So, at 8,000 crore rupees IPO, about 30% or so with Ranjan Pai still a valuation far ahead of what 1400 crore rupees or so has been paid by him thus far.
Right.
So that's the latest development on the BYJU'S front. At least for now, the loan that this New York-based Davidson Kempner had given BYJU'S has been offset. No further litigation, no further renegotiation of terms of repayment of that loan or the interest. That chapter for Baiju Ravindran, for the EdTech major BYJU'S, is over, signed, sealed, dusted, done away with. Now, I think the bigger challenges of the $1.2 billion loan, which still has to be, paid for, is something that BYJU'S will have to fight tooth and nail to.
Right. Not much has moved as far as that big number, $1.2 billion, are concerned. But Karthik, any positive development for a group like BYJU'S at this stage, if it gets any kind of money flowing into it, it's got to have ripple effect on other things as well.
It would. I think for one, definitely investor confidence, any fresh capital that BYJU'S wants to go out there and seek to infuse further funding to run its operations. Of course, I think it's a little green signal. It's a glimmer of hope. Beyond that, I think, a lot of mystery still lies locked away in the FY23 financial statements, which have not yet been audited and opened up for any sort of scrutiny.
True.
So FY22 numbers came out earlier this month, I think in the first week of November, and we saw revenues go about 2.3x of what they were in FY21. But FY23 is an all-new story. In fact, FY22 we also saw losses narrow.
Right.
But I think all the acquisitions that were made in 21, 22 and the loan and how that loan was utilized and everything else around this decline of EdTech as a learning industry, as a platform, and the students returning back to regular school, physical school, ditching EdTech platforms, not just BYJU'S but all EdTech platforms across the board. All those are going to get revealed in the revenue growth or degrowth in FY23, and if there is a degrowth and those humongous costs already on the books, then I think losses would widen even further.
Okay, I have only one question to ask. It seems like, at the end of the day, all pies are coming to BYJU'S rescue. First, you had Mohandas Pai being put on the new governance council at BYJU'S, and then you have Ranjan Pai, both from Manipal, associated with Manipal. Interesting, isn't it? Manipal Global Education as an educational institute, has gained such reputation in the last decade or two. And now you have both of these gentlemen actively involved in the next phase of education going forward, and that's online education.
So to me, Krishna, it seems, we know Mohandas Pai and Manipal Group were in fact among the earliest investors into BYJU'S.
Right.
And this is before Chang Investments had come in, and this is before Chang Zuckerberg, this is before Sequoia had come in, which then exited, and before, all the top VC funds across the world, before they had really bet heavily on the EdTech space and BYJU'S in particular. And all those bets actually started coming in only around 2018, 2019, and then the pandemic 2020 onwards saw valuations really soar on account of this rapid funding that BYJU'S received. But I think Manipal Group, Mohandas Pai in particular, they've been early stage investors in BYJU'S. I think they invested in the fundamental core of the founder, entrepreneur, of the sector, of what was trying to get built out of Bangalore, out of India. And those early bets, I think, have not yet been dissolved. So I feel while every other investor saw this rabbit opportunity to enter at a time when the industry was booming, in any case, make a quick buck and exit. I think some of them did make the quick buck at the $22 billion valuation, but many of them pretty much jumped ship as they saw valuation tank.
Right.
But Manipal Group, Mohandas Pai in particular, I think they have been early stage investors and continue to invest and continue to stay invested in the BYJU'S story, perhaps not as much in the EdTech story, also with the upcoming Akash IPO. So I think it's a good time for the investors who have held on to pick up some stake in Akash. Akash, remember, continues to be the only profitable business for BYJU'S, at least from as far as the last data was filed, the financial reports are filed. So I think it's fairly clear that there is some upside that existing investors are seeing in the Akash IPO, and they don't want to take a knee-jerk reaction right now on dwindling valuations and the negative news on BYJU'S emerging every week, every day almost, and are holding fort to look at perhaps some upside with Akash IPO.
Right. Interestingly, Akash Chaudhary now, after this deal, returns as the CEO. The promoter family is Akash Chaudhary. So that's interesting move. So you're getting somebody from the promoter family to lead Akash all over again. That's another strategic move.
So I think, again, Krishna, it really makes eminent strategic sense, because here
They set up the business.
They set up the business, they made it profitable, they sold it at a great valuation to BYJU'S. There is no reason, there was no flaw in the business model.
Right.
They sold it only to get a nice upside to what they had built.
Yep.
So there is absolute no logic in replacing them and getting maybe Baiju Ravindran himself to run Akash as CEO.
Yeah.
Because we've seen what Baiju Ravindran unwittingly, I'm sure, unwillingly, I'm sure, has done to the other group companies held by Think and Learn Private Limited.
Questions on whether he should be CEO of BYJU'S in the first place.
So there are questions on his reputation, questions on his own sustenance, questions on what he has brought to the table and what he has taken away from the table are rampant questions. So at a time like that, the only profitable business, one which is slated for an IPO, to not be run by somebody who's brought it to that level is absolutely ironic.
Absolutely ironic. Here's hoping that BYJU'S finds its way forward with the original investors still holding fort. Bear in mind, we just saw in the US last week what happened to the first investor into WeWork. The first investor who handed out a $47 billion check to Adam Newman, the founder of WeWork. And just last week, WeWork filed for bankruptcy. And the company that invested, and the man who invested, Masayoshi Son of SoftBank, saw SoftBank post quarterly losses of over $5 billion. That's another story. We're hoping that BYJU'S will not be a repeat of WeWork. But moving on here on the show to Air India. All of you looking to take more and more Air India flights and hoping for a brand new Air India unlike never before. Here is some news for you. Air India will be receiving one aircraft delivery every 6 days from now on, Karthik, for the next 18 months. I don't want to do the math, because the math is self-explanatory. Tell us, what does this mean? With that number of new aircraft coming in, there will be pressure on Air India to make sure that all of them are correctly maintained, put into service. You know, the kind of fleet that they did not have before.
Yeah, so we are talking about a total of 470 aircraft, Krishna. Right, this is the aircraft order placed by Air India across Airbus and Boeing in the month of May. Now, what has this really done? What this has done is we are looking at about 250 aircraft coming from Airbus, and we are looking at 220 aircraft coming from Boeing. That's a total of 470 now to be delivered starting next week. One every week. And if you do the math, you didn't want to do the math, but do the math, you're talking about 470 divided by 18, divided by on an average 4 weeks in a month. You're looking at one aircraft every 6.5 days. So, I mean,
the math is done. That's why I didn't want to do the math. My point is that great. One aircraft every 6.5 days. That means that much more work to get the new Air India into the skies.
So I think all of that has been chalked out. What are we looking at right now? We are looking at a 20% surge in air traffic over the 2019 pre-pandemic air travel levels, which were already at a record. Okay. So at 2019, we were at record number of flyers, record number of aircrafts taking to the sky. Now you had a pandemic and those 2.5, 3 years of lull, and here we are at a 20% surge over 2019. In a scenario where another carrier called Go First is out of the skies. So you have that share of the market already available for capturing. Indigo has taken the lead and captured a significant portion of Go First's lost market. And now you have Air India combined. And during this period, Air India got divested, got privatized. Tata Group came and took it over. Now this 470 new aircraft are largely going to be meant for servicing the international routes of Air India. And I think that is where the next level of growth for Air India comes. So the Maharaja, which was not a preferred choice for Indians to travel abroad, you would always want to take a Lufthansa or an Emirates or one of the better Etihad, one of the better airlines. I think now this new swanky new fleet of 470 aircraft coming, many of them being the wide-body Dreamliners, etc., all of them to take direct flights from India to popular destinations across the world at a time when there is in any case a 20% surge in air traffic seems like absolute sense. Now to your original question, maintaining that fleet and servicing that fleet, etc., I think these are all going to be long-term contracts. Let's hope the MRO that Airbus, that Pratt & Whitney is to set up in India at some point happens, but with or without that, I think these aircraft are going to be under warranty. These aircraft are going to be serviced frequently as per the norms of servicing, and those costs and and those sort of timelines would have been factored in any case by Air India. But I think overall, great news, more number of aircraft, more routes open up, and greater competition to global carriers who are operating out of India, taking Indians abroad. Now a better option of Air India doing the same for them.
Absolutely. Can't wait for more international flights by an Indian carrier when you can have more control over your own ability to travel overseas or not. There you go. Campbell Wilson too, calming people's fears, saying that we are recruiting many new crew and staff, improving whatever the training regime, and there is more work to do, and we are making good progress. So even he's feeling the heat, even as they are looking at a 470 new aircraft, and he's rightly pointing out all the new aircraft is meant for the international routes. But Campbell Wilson also talking about the fact that many of the aircraft which were grounded so far have also been restored.
Absolutely. So I think, so whatever deficit which was there up until now for faulty engines, for whatever other issues with the aircraft itself, I think those will get immediately replaced with the narrow-bodied domestic aircraft which come in, and the wide-bodied. So, I think what's also important right now, Krishna, is to see a lot of times you want to take a flight to a certain destination, to a certain country, you've got to go around, you've got to go via the hub of that particular carrier. Now this makes, with 470 Air India aircraft coming in and almost 900 plus Indigo aircraft coming in, I think a greater opportunity for India to become a great hub for transit. And look at the kind of impetus that is going to give to tourism within the country. Moreover, you're not really now dollar denominated when you're booking your international travel. You have an Indian carrier taking you directly from your city of origin to your city, and the popular cities that Indians frequent to, Chicago for example, Boston, Chicago, New York, these are countries, these are cities within the US which a lot of Indians frequent because of the large Indian population in those cities.
Yes.
But you're mostly going via somewhere. Now you have options of direct flights which Air India will fly to those cities. So I think for Indians visiting their families abroad, or Indian people of Indian origin settled abroad coming back to India, you have a direct option coming very soon for them.
Fair enough, Karthik. So that's for all people who keep doing regular trips to the US, who have relatives to visit and all that. I'm really hoping that Air India also ups its game as far as all the flights to Europe are concerned, because bear in mind, so far, some of the most popular European destinations, there are no direct flights from India.
Exactly.
There is no direct flight to Italy.
True.
There is no direct flight to Spain. There is no direct flight to Portugal. These are the premium holiday destinations of Europe, where Europeans themselves holiday. But for Indians, you'll have to do a minimum 15-hour flight, 2 flights, layovers. That's how things are. I'm really hoping that Air India, already we've been seeing those ads. It has begun direct flights to Vienna. It has begun direct flights to some of Milan. So these are happening, and I'm really hoping that solidifies, and India's accessibility and connectivity with Europe also goes up with these 400 odd.
But I think one little red herring there, which Air India would definitely be aware of, is that for 470 aircraft, look at the number of pilots you need.
Yep.
So for every sortie, you need 2 pilots, and the aircraft is not flying just 1 sortie a day.
Yep.
So you're looking at least 3 into 2, 6 times the number of aircraft. So you're looking at about 3,000 odd pilots at various stages of training to make it back to the airline and make sure that you have enough pilots available to fly those aircraft.
Already we've seen those fights break out between Air India and which other airline. 2 CEOs, washing dirty laundry, complaining about the fact that, people are quitting, pilots and crew are quitting one airline to join the other airline. So now, ladies and gentlemen, pilots have a notice period of not less than 6 months for airlines in this country. So there is going to be that staffing problem. Aircraft is one thing, staffing is going to be another problem. We will wait and watch as to how that's going to pan out for all airlines in the country.
Absolutely.
You can't just staff one airline and have others struggle and cut down on routes because they don't have enough pilots to fly. But moving on here on the show to a very important story. If you're a fan of global clothing apparel brands like H&M, Gap and others, there's a very good chance that the prices of your favorite apparel in these brands that say made in Bangladesh, their prices could go up. And that's because there's a huge fight for a wage hike among those garment industry workers in Bangladesh. Take a look at this Reuters report first.
Global fashion brands, including H&M and Gap, are committed to raising purchase prices for Bangladesh-made clothing. They aim to help factories in the country offset higher workers' wages. That's according to a US-based association representing more than 1,000 brands. Bangladesh is the world's biggest garments exporter after China. It has seen protests by garment workers recently over pay. This week, a woman was killed as demonstrations between police and factory workers turned violent. The Bangladesh government has mandated an almost 60% raise to the minimum monthly wage to $113 from December. It marks the first increase in 5 years. Factory owners had said the wage hike would eat into their profit margins by increasing costs 5 to 6%. Trade body, the American Apparel and Footwear Association, told Reuters brands would absolutely hike purchase prices to accommodate these rising costs. Low wages have helped Bangladesh build its garment industry, which employs about 4 million people. Ready-made garments account for almost 16% of GDP. Retailers in the US and Europe are the main buyers of Bangladesh-made clothes.
Right, and there is now, because of all the turmoil, we've seen the protests break out by garment industry workers, garment factory workers in Bangladesh. Huge protests. Police had to come in and quell those protests. And the latest is that over 150 factories, garment-making factories, clothing apparel making factories, have been shut down in Bangladesh. Take a look at those visuals, ladies and gentlemen. Now, those are the kind of protests that have been going on for the last couple of weeks in Bangladesh. Workers demanding better pay, a hike in their wages, ensure 25,000 wage, save 4 million workers. Take a look at those boards. That's what's been brewing. That's the kind of tension that's been brewing in the garment industry in Bangladesh, the so-called #1 garment maker in the world, garment exporter in the world, Karthik, and these are worrying signs.
Absolutely. So, Krishna, what really happened was, I think Bangladesh was trying very, very hard to ape China when it came to textiles. Right now, in textiles, it's all labor intensive. At the end of the day, you need factories, you need factory workers, and you need those factory workers to actually work hour after hour, shift after shift, and be able to churn out the kind of volumes that they are expected to churn out. Now, what is the present wage rate in Bangladesh, Krishna? I think $75 a month is what workers in Bangladesh are paid. $75 US. I don't want to do the taka calculation. I think that's going to confuse everybody. But let's just speak dollar terms. $75 a month is what an average Bangladeshi woman working in a clothing textile factory, which makes brands like Levi's and Zara and H&M, earns every month. What is $75? Juxtapose it to the minimum wages that the US pays its partly skilled, unskilled labor, folks who work at McDonald's and Subway. It starts at about $10 an hour. So $10 an hour is equivalent to about, you do, let's say, a 6-7 hour shift in the US. It's about $70 in a day. That is how much Bangladesh pays its women in a month. So that's the kind of number we are talking about. Now, of course, what the what the factories really agreed to last week was a 56% jump in the salaries. Now, that 50% jump took the average wage to about $125 or so. What are the workers really protesting for? They were looking at doubling their wages. So, from 12,500 or taka, which is about $75, they are looking at doubling it to about 25,000 taka, which is about $150 US. Now, US is now coming out and saying, as we saw in the Reuters package as well, that the upside to the cost of production will be borne by US, consumers. US consumers themselves are right now battling multiple other challenges, consumption not least being one of them. Now, in this already tepid consumption environment in the US and Canada for that matter, the factory wages doubling, resulting in at least a 50-60% markup in each of the labels that get exported from Bangladesh. You're looking at that discretionary spending in the US get cut down even further, and hence dollar inflow into Bangladesh reducing or staying at best the same despite this increase in wages. So overall, this sunshine industry in Bangladesh, which has competed with the likes of Vietnam and Thailand and China and made a mark for itself on the global stage, now facing, of course, these violent protests and 11,000 workers being, without jobs and 150 factories being shut. At some point, Bangladesh will have to step in, look at some sort of a middle ground in correcting the wage disparity that exists. But then how lucrative the textile industry in Bangladesh is at present with these wage rates may not be the case tomorrow.
Certainly not. That's the situation as far as Bangladesh is concerned. So beware if you're made in Bangladesh clothing items that you like. Prices are spiked up in the near future. But with that, we've completely run out of time here on this edition of Business Plus. Thank you, Karthik, for being with us. And with that, it's a wrap here from my side. This is Krishna Kumar signing off for now. But again, don't go anywhere. We will be back with World Business Report in just a couple of minutes. Keep it with News 9 Live.